you're a long-term investor, I need you to listen up because I have some absolutely fantastic news for you. The market is crashing. I think it's almost unavoidable at this point to say that we are in at least a stock market correction, if not a stock market crash. And like many of the stock market crashes of the last 20 years, I strongly believe that for a long-term investor, this is one of the greatest opportunities we will have in our investing lifetimes to build generational wealth. Today, I'm going to talk about a lot of the companies that I have covered on this channel. A lot of the names that I have been bullish on at way higher prices that I think have great long-term potential. We're going to outline some specific companies that are great discounts. And of course, I'm going to talk about some Canadian gems that are absolutely undervalued and present an asymmetric return opportunity. Welcome to Golden Larch Investing. My name is Liam. On this channel, we love to talk about Canadian investing. If that interests you, please do subscribe to the channel and like the video. It makes a massive difference and it doesn't cost anything. I'm going to throw up my FinChat home screen on the screen right now, and we're going to cover a bunch of different companies. Right now, I'm just on what I have called Golden Larch Investing, and it is a list of just about every company we've talked about on the channel. And I want us to highlight this year-to-date performance list because some of those numbers are just insane. So we've got some companies on here that have had some great and actually fantastic short-term returns. The one-year performance on some of them looks great. Palantir, for example, still positive for the year, which is actually incredibly impressive. Shopify, however, crazy, 30% down this year. Shopify is a fantastic business. They have really turned things from a speculative growth company to a tech giant. They are incredibly profitable. They have continued to become more profitable over time, and this is an absolute opportunity. I think just about anybody that was comfortable buying Shopify 40% ago should be comfortable buying it now. BCE, obviously, I've talked about them. I have not been bullish on that company, but we've seen, they're down 33% over a year. If they can maybe make some big changes, focus on the balance sheet and turn things around, I think it's a great opportunity. If they don't choose to do that, I'm not willing to step in. Synovus, oh my gosh, look at that 1 year, 48% down. I don't think anybody could reasonably argue with me that Synovus deserves 48% decline in a year, that they should be cut in half. And 31% of that is since January. So 4 months has been 30% drop on the stock. Yes, I understand that they're at a serious, dangerous point, but this is one of the few big Canadian majors that actually has a lot of assets they could sell off, has a pretty strong balance sheet, and has some fantastic long-term assets. They could basically sit on their hands for 5 years and come out of this as a profitable cash flowing business. I don't understand why investors were willing to buy them at double the price and are now running away. Very interesting. WSP Global, we're going to skip over North American Construction Group because I haven't actually made that video yet. We're going to go to WSP Global, down 10% over a year. I understand that recession will definitely impact these guys, but come on, talk about a diversified business model. Talk about recurring revenue. Talk about consistent growth. Do these guys really care about a giant recession? Probably. Do they care about tariffs? Definitely not. So really interesting. This is a very service-based company. We've seen a lot of hits to good-based companies, but these guys provide services. Unless we see serious tariffs on services, on the service industry, on Canadian services specifically, I don't see necessarily how they're going to be all that impacted beyond just the idea that we're going into a global recession. And if we are, we're going to see downside. But still, great business, will be cash flowing, and is actually probably one of the best positioned to change things up and to become leaner if they need to. I don't see a world where these guys actually struggle that much, no matter how bad the recession gets. Tech Resources, have not talked about them yet, but definitely am going to. Fantastic business. Been doing some research on these guys. These, we're talking critical minerals, which, by the way, should be giving them a boost right now. These are one of the names you want to own. Peyto. They're down 10%. These guys are hedged for any situation. This is the business that I talked about in the Canadian oil and gas space that is basically immune to downturns. And yet they're down 10% in a year. I mean, that makes no sense. Pardon me, that's not even in a year. That's year to date. That doesn't make sense to me. Baytex. Oh my God. Baytex Energy is priced as if they're going bankrupt. And okay, serious global recession, possibility there. They're not quite as capitalized as a lot of the majors, but come on. We're talking 45% in 4 months. Really? We're talking 60% in a year. I think it's worth a flyer. They're planning on returning a huge amount of money to their shareholders. If things get really bad, they just won't. And they'll hold on to that. They'll keep that cash on hand and they'll be fine. I think at these prices, they should be looking at those buybacks. Honestly. Okay, Fortis. Hey, I talked about these guys as being bulletproof. They're bulletproof. They're simply bulletproof. They do not care. The world would have to be ending for these guys to really, really get hit. They are going to keep trucking along. One of the most impressive business models for this exact scenario. London, we haven't talked about yet. Agnico Eagle. These guys, man, owning a gold mine is fantastic in these kind of time periods. However, I will say one thing. If you look at the 2008 financial crisis, if you looked at people who were buying a lot of gold going in, gold held up. Absolutely. Gold was a great place to have your money as the recession started, but it didn't rebound the same kind of way that a lot of other companies did. You would make a lot more money buying an Apple stock than you would have just holding onto gold. Now, obviously, there's a lot more risk in that scenario if you're buying Apple stock, but if you're a risk investor, if you're a long-term investor, if you like equities, if you're building an equities portfolio, I think that there's definitely potential that things are going to drop so much that gold is not necessarily what you want to hold. But notice I've been saying gold. I mean, like the actual asset. These companies, I don't think have seen the actual value realized that gold represents right now. With the price of gold the way it is, I think these guys should be higher, honestly. And I know it's crazy to say that about a company that's up 70% in a year, a mining company. Absolutely fantastic company. I talked about them on the channel more than once. I think they're fantastic. Barrick, hey, these guys are up. Things looked like they sort of solved themselves maybe in Mali. There's definitely been some movement there. And obviously the world's attention has turned away. So I think they've gotten their board of directors has taken a big deep breath out. And hey, they're up almost 9%, which 2025, fantastic returns. Meg, I think we've mentioned them in passing, down a big chunk. Manulife, again, kind of mentioned them in passing, down a chunk. Brookfield Corporation, I understand. Ready? I'm waiting for every Canadian now. This name has become so political, and it's sort of unfortunate because they're a really great company as an investor. They're down 23% this year, and yet they're still up over on a 1 year basis. Still up 15%. So I think the way they return, the way their returns compound, fantastic. The assets they own, fantastic. I don't think they're gonna grow as fast. It's almost like owning a bank, right? Where obviously when things get bad, these guys are in trouble. Absolutely. They're not going to have a fantastic year, but it might be a great opportunity to build a position because they've been going absolutely wild for years and years and years. Basically, throughout this pandemic era, they've just been doing fantastic, right? We've seen crazy compound growth, right? I think it was in the 20-something% every year. I think it was like close to 25, right? And if you can compound at 25% every year, obviously the stock price is going to be through the moon. With this pullback, you can probably get a way better price. Brookfield Renewable. Hey, I've heard some people thinking, hey, maybe this company is in real danger. I think they're okay. I think being under the Brookfield umbrella does shield them a little bit. I do actually kind of respect the stock price being down. In a recession, a lot of these kinds of companies that are a lot more speculative, that depend on investment, depend on governments investing in renewables, that depend on companies investing in renewables, they're going to struggle. And depending on what their debt situation looks like, maybe the interest rate dropping story will help them out and they'll be totally okay. But obviously, if it's American stagflation and we see interest rates stay high and the economy start to collapse, I mean, they're in trouble. And then tourmaline. Hey, I talked about this, Pato. I'm going to say it again with tourmaline. I don't get it. Why are they dropping? Like, in all sincerity, right? I'm not trying to be super biased here. In all sincerity, why are they dropping? What story could possibly justify down 15% year to date? I don't understand that, really. I think that they are such a well-positioned company. I think their growth numbers are so fantastic that I don't see a really good reason why they should be dropping. And I think that LNG Canada coming online this year should mean their stock price is up significantly. They're down over the last year, like a non-insignificant amount. You could argue that that's because, LNG Canada got delayed, and so the 1 year numbers are representing like the sort of initial excitement for that LNG boost. But I seriously think that there's no real reason why they should be down so much. But now let's get to some of the heavy hitters, right? These are companies we've talked about on the channel. Some of them we've done whole videos on. Some of them I've got videos sort of scheduled out in the future. But now let's dive into the Larch Fund. These are my personally owned stocks that I own in the public portfolio. And we have just read across the board. If you look at this, these are the performance numbers for basically my portfolio right now. And obviously it sucks. But again, we're going to look at this year-to-date number here. And you know what? I'll actually even move that year-to-date number. Oh, maybe I cannot. Pardon me. I'm going to shuffle that year-to-date number so that it's at least a little bit easier to see. At the top of the list, this is a company that I haven't actually talked about. We've got an episode coming out on them in the not-so-distant future. Strathcona Resources. Talked about wanting to invest in smaller companies. I think these guys are really quite great. Got the Waterous team behind them, and they're down 25% year to date, which is definitely like a punch in the gut, right? This is a company that's, I think, pretty well positioned for the upcoming environment, but obviously has been struggling. Then we go down the list. C&Q. I mean, come on. I talked about buying the dip in C&Q almost a month ago. I talked about it again a week ago, and somehow the dip just keeps on dipping. It's like that one joke, right? Where you just constantly see the dip every single time. Is this the dip? No, this is the dip. Just gets worse and worse. I think C&Q is a real opportunity at these prices. I think they are super well positioned, and I think they've shown us why. Because in the last big sort of trough of the Canadian oil industry, in that 2015 through to 2022 timeline, where we saw Canadian oil stocks drop significantly, where we saw companies exit the market, where we saw money flowing out, these guys became dominant. And I think with that positioning, with that advantage, with that mindset, and with that scale, like, what is stopping them? If they can remain cash flow positive, and I believe they can. If we have a serious global recession and oil prices are below 40, yikes. Okay, they're in trouble. But basically beyond that, they can fund their dividend at like $45 oil. Fund their dividend. You can continue to get dividend prices if oil continues to drop $12, $13. And if the market's already kind of pricing in recession and oil's only at, high 50s, maybe 60, I'm pretty positive. And then there's the story of WCS versus WTI. The differential is shrinking as the prices drop. I have talked about how important it's going to be for that differential to shrink. Now imagine the other side. Imagine the other side of this story when we get out of this recession, because we will. Eventually, the global economy will come out of recession. And these guys managed to make it through the whole way. Their stock price became incredibly depressed, and investors were able to buy a huge amount. And then they're out on the other side in that world I've been talking about, where WCS and WTI are a lot closer to alignment, where they're making an extra $5, $10, $15 in pure profit every barrel of oil. That's millions and millions of dollars that is going straight to the bottom line every single day. That's no joke. Serious opportunity here. Okay, we already talked about tourmaline, so I'm not including them in this little moment. National Bank of Canada. Like, these guys are really quite well positioned. I understand that the economy is in trouble. I understand why the stock price is down, and they were running kind of hot. You got to give them that, right? They've been a darling stock. I think it's a great buying opportunity. Seriously, this is a hold forever stock for me. This is going in my retirement portfolio, and I am in my early 20s. So my retirement portfolio does not need to be touched for a long time. That's where this guy is for me. That's where the stock belongs. I think it's one of those I'm just going to sort of pile shares on forever. S&P 500, I mean, I don't have to talk too much about that, right? I own that as my sort of general market ETF. And I think buying the dip, if you're a dip buyer, should probably be as broad-based as possible, right? I've talked about that. I think the majority of funds should be trying to buy the market in general on dips like this. When do you get the market at reasonable PEs? During a crash. And while I do believe personally that I can pick companies that will outperform, I know for a fact how many investors have been burned by that mentality. And that is why the SPY is such a big part of my portfolio. Then we go down to EQB. These guys, again, they're kind of a darling stock. They're a little bit on the smaller side in the Canadian banking space. But, big but here. If you look at their stock price, we're seeing a 10.5% year-to-date decline. And I don't think that's realistic. I don't think that's justified. And I seriously think that they're in a really good position. One of the fears I've seen from investors specifically about the Canadian banking space is that for one reason or another, they believe that the Canadian market's going to get cracked open. They believe that American banks are going to make their way to Canadian consumer banking, that consumer protections will go away, that regulations will move out of the way, and that American banks will be here and they'll just destroy our banking system. No, I disagree. Because I think Canadian banks are incredibly well run. I think that they have managed to compete in international markets. And I think that if you want one that definitely does not care and actually would benefit if the market was cracked open, if barriers were removed, is EQB. They have been advocates for open banking. If that sort of platform, if that sort of story comes to pass, which again, our markets, our sort of political world has been talking about reducing barriers inside the country. The international world has been putting them up, but also demanding others get torn down. It's a whole story. It's a whole world of turmoil. And there's one company that really, really loves disruption in the Canadian banking space. It's EQB. Next on the list, Royal Bank of Canada. One of the first companies I talked about on here. One of the companies that I have personally had money with for the longest time. I actually had a parent that worked for them once upon a time. I've banked with them since I was a small child, and I seriously believe they will remain a giant player in Canada for my lifetime. I think I will be able to bank with them from when I was a little kid until I die. And I believe that they will continue to outperform because in this world, in this space, they have so much scale and such a huge advantage in the parts of the banking world that really matter. However, I understand that the stock price got up there. I understand the valuation got stretched for some investors, and I think this is a reasonable dip that we should be buying. Again, in the 10% down year-to-date club is Canadian National Railway. I really love these guys. I think that they will outperform long-term. I think they're actually probably one of the companies that we should be talking about the most, considering the fact that a huge story in Canada is unlocking our resource industry, unlocking mining, and unlocking the sort of industries of the Northwest. Canadian National dominates that space. Canada's Northwest is basically just served by them. I live in central Alberta. I can tell you for a fact, Canadian Pacific does not go north. Canadian National does. And if that space is going to see some investment, some infrastructure, they're going to be the ones that benefit. Whose rail lines do you think things are going to move on to build that infrastructure? Whose rail lines do you think products are going to move on both in and out of any mine, any community, any infrastructure port, any resource project built in this country? I think they will benefit huge amounts from that. Obviously, they will suffer if the economy contracts, but I still think that's short term. And I think we could see some real long-term gains out of this. So I think there's going to be a little bit of a sort of dip here, and then we're going to see them rebound off that. It'll be a great stock price. And I think that they're a buy and hold forever stock, right? It's one of those ones that Buffett even talks about, where he thinks the railways are going to outlast him. And I think they're going to outlast me. Okay, we're getting to the bottom of the list here. Pembina Pipeline. I love these guys. I really think this is one of those like dividend aristocrats that you're just going to sit on. And you'll be like, all right, perfect. Gets a couple of dollars every paycheck, and you're simply going to collect that cash in 30 years. Reinvest the dividends and hold on to the stock. Now, there's a whole story here with Cedar LNG, which I think is hugely bullish. I think they've shown a really smart way to get those projects built, and I think that they will probably do it again, and I am excited for that. Sure. Do I think that it's reasonable their stock is down about 6% if we're worried about a global financial crisis or a global recession or a global trade crisis or whatever we're going to end up calling this? Yeah, sure. 6% is not crazy. Speaking of not crazy, speaking of that same range, speaking of those same things, Enbridge, kind of hand in hand. Obviously a slightly different story, right? Because they're slightly different companies. They've been sitting at slightly different multiples. They've got sort of slightly different characteristics. They serve slightly different markets. Same story, essentially, right? I think it's a buy and hold forever kind of stock. And that's what I think basically about a lot of these Canadian companies. And to sum it all up, this is a crash. It can always get worse. But as an investor, as a long-term investor, these are the moments that we need to make sure we put ourselves in the best position to win. These are all companies that I have researched for this channel, that I have talked about on this channel, and that I have invested in. I have put time or money. I own them through ETFs. I own them directly in the public portfolio, or I have a tiny fraction in my RRSP. These are all companies that I believe in. I think just about everybody on the list has some real potential. And I think that if you can afford to invest, if you have the money and you can spend the time to research companies, I think you should be picking at least a couple names in a couple different industries that you think will outperform in the long term. Think 10 years, not 10 months. Yes, things are scary right now, but as an investor, we're in a great spot. That's about all I have for you folks today. I hope you enjoyed the video. If you did, please do like the video, subscribe to the channel. It makes a massive difference and it doesn't cost anything. And with all that being said, I hope I see you in the next one.